Hey guys, Mike here. So today we get to answer all your questions, and hopefully you guys get to participate on this. I always appreciate it and everything. And we're discussing topics as far as like Nvidia, the bond market, what happens to banks when the yield curve uninverts, which is a very good question. I had to go look that one up. Also, are we still going to have a rally for November, December, that kind of stuff? And so, we'll get straight into this. Again, feel free to participate in the comments and stuff. I appreciate all you guys submitting your questions and everything like that. And the first one's going to be, I'm just curious, Mike, if you still think we will have a greedy November and December. I will say this, I would not be surprised if we had a greedy November. I don't know about December, but again, next week, ask me that again after next week. Remember, we have FOMC, the Treasury bond issuance is coming out. That affects the bonds, which affects the yields, all this stuff coming out. And so let's wait and see what happens there. Again, I don't think the Fed is going to raise rates this time. Again, they may do it in December. They could surprise us, but again, I mean, I'm not sure if that, as far as the Fed tracker, they've been wrong before, but it's like a 0% chance. I mean, they're going to do it. I think even some people started saying they're going to cut. I'm like, oh Lord, but that's never, no, not going to happen. Speaking of Nvidia, why do you refer to big money holding up Nvidia as it should be crashing and is overvalued? Question mark. It's actually the bears that are holding down Nvidia. It is severely undervalued, used on future earnings. It should and will be booming soon. And so, it's not really so much that Nvidia is expensive, which it is. I mean, if you look at the 4 PE, it's up there, but so were pretty much all of the, Magnificent Seven. So, and some of them had higher 4 PEs than Nvidia does. It's just really more or less the move, right? The move has been huge. You've got a head and shoulders on it. It's sitting here with this Wyckoff distribution, which is so far played out beautifully. Again, I don't know if that's going to happen and continue to play out because it might surprise the earnings again and move up, but the bar just keeps getting set higher and higher, right, for this one. And it's no different when you look at Tesla. If you would have asked Tesla, people went up sitting at 300, like, oh man, we're going to 1,000, all this other stuff. And it's been selling off ever since, right? It never got back there. So, because it had such just a dramatic move. So it's a dramatic move, and it's also the fact that, I do like to look at Wall Street and say, okay, what does Wall Street want to do here? They want to continue to buy this at 500, or would they rather buy it down here in this zone, right? Because when you look at the head and shoulders, for example, if it did play out, and I'm not saying it's going to, and again, we talk about this move. I mean, just look at this move, guys. Let's keep this in context here. This is a stock, a big stock that's moved 257% just in the year of 2023. Since October, 356%. That is massive for a large stock. This isn't a penny stock or nothing, right? And so again, you got this head and shoulders. Yeah, it's a beautiful head and shoulders, actually. And if it were to play out, what's so crazy about this is, and obviously it's too perfect. But when you look at this, here's your neckline, go to about 22%. If you play this out, if it's actually played out like a true head and shoulders, the exact bottom is 22% down to that gap. Now again, that's almost too perfect to play out, right? But and you ask yourself, like, where would big money want to buy? Where would anybody want to buy? You'd rather buy down there at 320 than buy, what was it, 500 or 400 and all this good stuff. And again, if you're one of these people that think it's going to 1,000 or 3,000, whatever you think, wouldn't you rather buy it at 300 or 320 or 370 or 380 versus where it's at now, where it was at 500? I'm just saying, and again, we'll see, but I understand your point, but that's really where I'm coming from. I'm almost looking at what happened to Tesla and then seeing, okay, let's see what happens and see if big money tries to do this with Nvidia. But if the market continues to sell off, Nvidia is definitely going to go down with it. It's not just going to be like, oh, I'll be the only one going up, right? And you do get to that point where stocks, they'll start just blowing out earnings, right? And they're killing earnings, but all of a sudden they're not getting rewarded anymore. They're not gapping up anymore. It's like, what's going on, right? Because they paid it forward so much. And so you just run into those times. And again, I'm not saying it's going to happen. I'm just saying beware of it and, take advantage of it. If you love the stock that much and it goes down and fills that gap, it's actually better off long term to fill the gap than move forward, right? And knowing Nvidia, it will skyrocket. But, again, that's just me. Now, next question is, hey, Mike, rotation into small caps, question mark. Oh, boy. Small caps are a mess. I mean, seriously, I don't know how many times I got to say this. Been saying it for weeks, months, whatever. And I mean, this thing just broke this 5-year support zone. Really, is what this has been for it, right? It was resistance for a while, switched over to support, and now it's broken. And I mean, it's just Yeah, you look at this thing, it's just, I've been saying it for weeks and months. It is a horrific time for small caps. It might be one of the worst times ever for small caps right now, just because everything is going on. And so, they're being punished just because you're not expecting earnings to be good. But the good thing is the market's supposed to be forward thinking. So eventually, you would think these stocks have to start getting a bid. It's just a question of when. And guys, before we continue, if you get anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. And our next question is, would you do a session on bonds? I have talked about bonds a lot, man. I think everybody would agree with that. And I've done members videos on the bonds in more detail. But let me just break this down for you. Here's what's going on with the bond market if you don't know it. It's all about this deficit we're running and the Treasury issuance to actually keep up with it and fund it. We're talking about, back in July, $1 trillion, okay, had to be issued to try to refund the account they drained down, to try to fund what in the world our government is doing here, right? Sending money overseas like it's just water, running this deficit up. It ain't decreasing, it's actually increasing. But, understand, why? Because look, there's the deficit. Look at this thing. This is crazy. It's insane what they've done here. They literally have tripled our deficit since 2000, or tripled our debt, since 2010. Mind you, before it was like, okay, from 2000, 2010, 10 years, we only almost a little bit less than doubled. Same thing from 1990, 2000, and then tripled this thing. And there's no end in sight. Look at just the angle of this. There's no end in sight of this. And of course, what else has happened that's affecting the bond market? Well, the Fed, of course, what they do, I always say this, back here, nothing going on. Then all of a sudden, 08 happened, bam, the Fed took over, and then look at this crazy mess, right? And so they have taken their balance sheet from 1 trillion to 8 trillion in less than 30 years here, and basically less than like 15 years they did that. And so, what are they doing now? They're running it off. They ran $1 trillion off. They're not the biggest buyer of bonds anymore, so therefore, the supply is going way up at the worst time because 3 of the biggest buyers aren't there: the Fed, China, and Japan, right? And so what does that do? It leaves a surplus of supply of bonds. It leaves a lot of other bondholders going, wait a minute, do I want to buy this? Probably not, which is why the banks are holding just billions and billions worth of unrealized losses right now. This is what the Fed did. Greatest bull market in history for a reason, because they pushed interest rates down because they were the biggest buyer. All the rates were down, and so tech took over, right? And until the bond market stabilizes, because there is no stock market without the bond market. The bond market is much larger, and how do companies fund their debt, especially small caps, and even bigger companies, right? They're issuing bonds. I think I read it was Apple, even their bonds they're issuing out are like 6%, and they're not even a risk. I was like, wow, really? I think it was Apple. I could be wrong on that, but correct me in the comments if you know somebody else. But yeah, it's just, we've never seen anything like it before. I've showed charts, I've seen them. We've never seen a bond market like this. And think, the bond market actually went from 16 trillion to 24 trillion in like 5 years. And that ain't a good thing, all right? Because that's debt, right? And this ain't just here. The problem is it's global. Like, other countries are in way worse shape than we are. And so that's what makes this whole thing, that's an X factor. It's another X factor. You don't know, because you can't predict what's going to happen in other countries, right? I can't. And so, again, that's just where we're at. So, a lot of people are piling in there. And again, it hurts the stock market because of multiple reasons. One, these companies have to fund debt. But 2, it gives people another option, right? Especially rich people are like, I'll just buy the bond and get 5%, 6%, whatever it is, versus going in to buy stock, because I don't know where that's heading, right? And so, just keep that in mind when you're thinking about that. So hopefully that helps out a little bit. Now, the next one here asks, what happens to bank stocks when the yields uninvert? And I actually didn't have a clue, and I don't even know if this is going to help you. But what I did was I just pulled up Wells Fargo and then the yield curve for the 2-year, 10-year. And when you get above that line right there, was the 0 line or whatever, that's when things get bad. And mine's actually the opposite. I actually have mine going down versus up. But either way, this way, when it crosses down the line, you can see the bank stocks go down. And both the .com and 08 crash, but also went ahead and pulled up the actual, here you go, uninvert right here, the stock market, the S&P versus the yield curve. And you can see, in this case, in 2020, when the yield curve uninverted in 2019, the stock market actually went up. But when you pull back to 08, you can see when it got across the 0 line, It actually went above the zero line, uninverted. The stock market crashed down. Then it reinverted, so the stock market skyrocketed. And then when it finally came across the zero line again, the stock market started to crash, started to sell off, right? And then when you go to dot-com bubble, it crashed even before. It started crashing before it ever uninverted, right? It was still inverted when it actually crashed in dot-com bubble. Dot-com bubble was a weird one, to be honest with you. You go back to as far as this goes, you see back in 90 or whatever it was, it actually came across the zero line, stayed on the zero line. The market kept going up, up, and then finally it crashed. And so, sometimes you have this last hurrah of a rally before you get the recession. So you could have that, but it's usually you get the things breaking when things uninvert. So hopefully that helps out a little bit. Next viewer says, "Hey Mike, I enjoyed. I'm educated by these posts. You have mentioned many times that our economy is basically controlled by the Fed. 2 questions for future discussion. Some people have advocated for the elimination of the Fed, like Andrew Jackson did. Is that realistic? What would our economy look like without the Fed?" Well, what the Fed really is they're the backstop, right? They're the rescue plan. I mean, they did it in 2008, they did it in 2020, they did it this year in 2023 with the bank. So the truth is, one, no, you can't get rid of them because I don't know what you're going to do with the $8 trillion in assets. And two, aren't they the emergency backup now? Just because I've always said our economy, especially the way our government's ran, now that each one of them are for sale and they're just out for themselves and not for the country, and they have no idea what the hell they're doing. That I've been saying this since like early 2000s, but this economy or this country with our government the way they are ain't nothing but a runaway train that's lost the brakes. And I don't know if you ever seen that Denzel Washington movie where it's the runaway train. They can't get in the caboose or whatever it's called, so they can't stop it. So they're up there, and the Fed, and they're coming around this turn, and it's about to try to come off the rails. And Denzel Washington's sitting there, and he's going, "Hit it!" And I think they actually did get in the main engine, right? So he's hitting this emergency brake or something. But of course, Denzel Washington, he's up there unscrewing like the each of the carts brakes too, right? That's kind of the Fed. The Fed is like, our economy's going into it, and it's going to tip over. Here we go with all this crazy debt and deficits, and Denzel Washington's going, "Hit it," and the Fed goes, "Bop, bop," hits the brake or whatever. That's them pumping out money or putting out some kind of emergency plan. And then the wheels come back down, and all the wheels are on there, and they're grinding around this turn. Pretty good movie, by the way. I think it's called Runaway or something. But put in the comments if you remember what the name of that movie is. But that's the Fed. And so I don't think we can go without the Fed. That's just my opinion. But, put in the comments what you think on that one. And then our second to last comment here, we got, "Hey, Mike, been investing in the market for a little more than a year now and still consider myself a new investor. Just was wondering what books you would recommend I pick up. I've read Rich Dad, Poor Dad, halfway through Millionaire Next Door. I've tried to read The Intelligent Investor, found that kind of dry. I'm also looking for books to teach me chart patterns, which you do a great job of." And that's a good question. And I've read all those books too. And honestly, the truth is, man, I think you can read all the books you want to read, but it's just about doing it, especially when it comes to charting. When it comes to charting, you just got to get on the charts. There's plenty of YouTube videos that can help you out. I know even our Discord, we have an educational section. You can see that as well. But you can look at them all day long, but it's hard to spot them when they actually happen unless you're on the charts actually looking at it. And I know like in TradeView, there's a replay pattern, which I tell everybody to use if you really want to learn, and just go through and see if you can spot what you're learning. But I would say use YouTube videos because they actually will show you the charts as it's going through. Unlike a book. A book is stagnant, right? You're just looking at it and you're reading the stuff. And so I don't think that's really going to help you a whole lot. Again, you've read the ones that most people have read. And so, but I'd say pull up plenty of YouTube videos, go on the charts, join groups, whatever that you feel comfortable with, and start learning in live action. That's really what you got to do. And really come up with you got to find out what kind of investor you are. You got to find out your risk profile, because you may have $10,000, someone else got $1 million. The person with $1 million is going to be investing way differently than you are. That's just my advice. Please in the comments put what you think about that. And then the last one, which I've never been asked for, I don't think, it says, "How did you start YouTube?" I don't think anybody's ever asked me that question, to be honest with you, but what happened to me was 2020 hit, we shut down the world, I got laid off. Never been laid off before, and I was very upset about it because I'd never been laid off before, I didn't know, I thought you got laid off. People who got laid off were the ones at the bottom of the totem pole as far as, productivity, work ethic, all this stuff. We'll come to find out, it's just seniority, right? And I was so upset about that, let me tell you. And I remember I came home that day, told my wife I got laid off. Obviously, the world shut down. I don't know when I'm getting another paycheck. I didn't know how to file for unemployment, nothing. Never had to do it my whole life. And always taught to be a company man. So at that point in time, I couldn't sleep that night. I got up at 4 that morning after laying in the bed, restless, and I got this notebook out. And I sat there And I still got this notebook. It says right beside me. And it says, number one, I don't even know if you can see that, but at the very top, it says, I will not be a victim again to this system. And, you know, because that's what this is. The system is totally rigged. I don't care what anybody says. I know for a fact it is. Nobody ever convinced me any differently on that one. But, and I'm like, you know what? I got to come up with stuff. So I just come up with a list of things. You know, what can I do? And YouTube channel was one of them. And so I said, well, I'm going to give it a shot then. And my whole goal was, I said, I want to learn. It was all about me, really. I wanted to learn. And I thought, you know what? I'm going to go on this journey. And whoever wants to come on, come along. And hopefully what I plan on doing is pulling back the curtain on this system, on this market, figuring out how it really works, you know, what moves it, what doesn't, all this other stuff. And I have learned so much. And I mean, I've learned more in the last 3 years having this channel than I ever did. And I'm not young. You can see the gray in my goatee right here, you know, than I ever did. If any book ever, no book ever showed me. I went to college. I got 3 degrees, for God's sakes. None of them. Getting an MBA, any of that stuff, bachelor's, associate, none of it taught me what I've learned in the last 3 years. Seriously, none of it. Anyway, guys, hope you have a good one. I'll see you tomorrow. Please hit the like, subscribe button, share the videos, all that good stuff, and have a good night.